How rich people pay no tax. You work hard all year, you get your paycheck, and before you even see the money, boom, taxes are already gone. Meanwhile, you're reading headlines about billionaires paying less in taxes than their secretaries. And you're sitting there thinking, how is that even legal? My name is Zach, and I spend way too much time thinking about why the tax code seems to be written for wealthy people and against everyone else. If you're someone who feels like they're grinding every day, but the government always seems to take the biggest cut before you can build any real wealth, make sure to hit the subscribe button and give this video a thumbs up, because today we're pulling back the curtain on exactly how rich people legally pay next to nothing in taxes. And more importantly, how some of these strategies are actually available to you right now. Most people think rich people avoid taxes by cheating, by hiding money in some offshore account in the Cayman Islands. Look, some of them do that, but that's not what I'm talking about today. What I'm talking about is completely legal. It's built right into the tax code. And the reason most people don't know about it is because the system benefits from you not knowing. ProPublica's investigation found that the 25 wealthiest Americans paid an effective tax rate of just 3.4% on their wealth growth between 2014 and 2018. Meanwhile, the average American worker pays somewhere between 22% and 24% on their income. 3.4% versus 22%. On way more money. You trade your time for a paycheck. The moment that paycheck hits your account, the IRS already knows about it. It's called earned income, and it is the most heavily taxed type of income there is. Rich people? They don't live off paychecks. They live off assets. Let's use a simple example. Say you own $10 million worth of stock in a company. This year, that stock grows to $12 million. You just made $2 million. But here's the thing, you didn't sell it. And in the U.S. tax code, if you don't sell, you don't owe taxes. Those are called unrealized gains. The IRS cannot tax money you haven't realized. So what does a billionaire do when they need cash to, I don't know, buy a yacht? They walk into a bank and say, I have $10 million in assets, give me a loan. The bank says yes. The billionaire gets the cash. And because a loan is not income, zero taxes. This strategy even has a name on Wall Street. It's called buy, borrow, die. And yes, that's the actual term. Let me break this down so it's crystal clear. You earn $100,000 salary. After federal income tax, state tax, Social Security, and Medicare, you're probably taking home somewhere around $67,000 to $72,000. You paid roughly $28,000 to $33,000 in taxes on that. Now let's say instead you own $1 million in an index fund. It grows 10% this year. That's $100,000 in gains. You borrow $80,000 against your portfolio at a 3% interest rate. Your cost? $2,400 in interest for the year. Your tax bill? Zero. Same starting point. Dramatically different outcome. And that loan interest? Sometimes even that is deductible. Now, you might be thinking, Zach, I don't have $1 million portfolio. This doesn't apply to me. First, because this is the destination you're building toward. And second, because some of these principles scale down to your level right now. Do you have a 401k or a Roth IRA? That's a version of this. You're sheltering money from taxes by putting it into an asset account. The wealthy just do this on a massive scale with far more sophisticated tools. Real estate depreciation, qualified opportunity zones, charitable remainder trusts. Look, it's not just math. There's a psychology to this too. Wealthy people are taught from an early age that income is something you design, not something that just happens to you. The rest of us are taught to get a good job, work hard, and let the chips fall. We're conditioned to be consumers of wealth, not architects of it. And that mindset difference, it shows up in every financial decision you make. whether you spend your raise or invest it, whether you see debt as something shameful or as a tool. So what can you actually do with this? 3 things starting today. 1. Max out your tax-advantaged accounts first. 401k, Roth IRA, HSA. This is your version of sheltering income from taxes. Non-negotiable. 2. Start thinking in assets, not income. Every dollar you invest is a dollar that can eventually work for you without creating a taxable event every month. 3. If you're a freelancer, a side hustler, or a small business owner, talk to a CPA about legal deductions you're missing. Most people leave thousands on the table every single year simply because they don't ask. The tax code is not neutral. It was built over decades by people with lobbyists and accountants who made sure it worked in their favor. That's just the reality. But here's what I want you to take away from this. The rules aren't hidden. They're just unfamiliar. And the single biggest wealth gap in this country isn't between people who earn different amounts. It's between people who understand the system and people who don't. You now understand it a little better than you did 10 minutes ago. That's how this starts.